Bitcoin just hit $100,000 and my phone is ringing off the hook. People are calling me saying, Dave, should I take out a home equity line of credit to buy Bitcoin? I had a guy last week tell me he's thinking about mortgaging his paid-off house to buy 10 Bitcoin. Another woman called in wanting to cash out her 401k, pay the penalties, pay the taxes, just to get in on this thing before it goes higher. And I'm sitting here watching this madness unfold, thinking the same thing I thought during the tech bubble, the same thing I thought during the real estate crash. People have completely lost their minds. Here's what everyone wants to ask me. Dave, do you think Bitcoin will hit $1 million? Wrong question. Totally wrong question. I don't care if Bitcoin goes to $10 million tomorrow. The question you need to be asking yourself is this. Will you still have your money when this whole thing collapses? Because, folks, I've been doing this for over 30 years. I've watched bubble after bubble destroy people's lives. And I'm telling you right now, with everything in me, Bitcoin is gambling. It's pure speculation, and it's going to zero. Not might go to zero, not could go to zero. It is going to zero. And if you've got your hard-earned money tied up in this thing, you need to hear what I'm about to tell you, because your financial future depends on it. Let me tell you what Bitcoin really is and what it isn't. Bitcoin is digital code. That's it. It's ones and zeros on a computer screen. It's not a real asset. You can't hold it in your hand. You can't use it to build anything. It doesn't produce anything. And here's the kicker that nobody wants to talk about. Bitcoin produces zero income. Zero. When you own stock in a good mutual fund, you own pieces of companies like Coca-Cola, like Ford, like Apple. Those companies make products, they generate revenue, they hire people, they create value in the world. When you own real estate, you can rent it out. You collect rental income every single month. That property generates cash flow. That's an investment. But Bitcoin? Bitcoin just sits there. It doesn't pay you a dividend. It doesn't send you a rent check. It doesn't do anything except exist on a blockchain hoping that tomorrow somebody will be willing to pay you more for it than you paid today. When you buy Bitcoin, you're not buying an asset. You're buying nothing but the hope, the desperate, foolish hope that someone else will pay you more for it later. That's not investing, folks. That's speculation. That's gambling. And I don't gamble with money, and neither should you. I invest in things that produce income. I invest in things that have intrinsic value. I invest in good growth stock mutual funds that have 10, 20, 30-year track records of making people wealthy. I invest in paid-for real estate that generates rental income and appreciates over time. Those are investments because they produce something, they create wealth, they generate cash flow. Bitcoin does none of that. It's digital fool's gold, and the people buying it right now are banking everything on finding a bigger fool to sell it to tomorrow. That's the textbook definition of speculation, not investing. And I don't care how high it goes. I don't care who's buying it. I don't care what the hype says. Dave Ramsey doesn't invest in things that produce nothing. Never have, never will. And neither should you. Now let me break this down even further because I want you to really understand what's happening here. When I tell people to invest 15% of their household income into retirement, I'm telling them to put that money into good growth stock mutual funds. And here's why that works. Those mutual funds own shares of actual companies. Real businesses with employees, factories, products, customers, and revenue. When you own a piece of Microsoft through a mutual fund, you own a tiny slice of a company that sells software to billions of people worldwide. When you own a piece of Procter & Gamble, you own part of a company that makes toothpaste and laundry detergent that people buy every single day. These companies earn profits, they grow, they expand, and over time, your investment grows with them. That's wealth building. That's how you retire with dignity. I've been teaching this for decades, and the reason I teach it is simple. It works. The S&P 500 has averaged around 10 to 12% returns over the long haul. Good growth stock mutual funds with solid track records have made ordinary people into millionaires by doing nothing fancy, nothing exciting, just consistent investing over 20, 30, 40 years. That's boring. That's unsexy. But it's real. And it works. Real estate works the same way. When I tell people to buy a rental property with cash, notice I said with cash, not with debt. I'm telling them to buy an asset that produces income. You buy a house for $150,000 cash. You rent it out for $1,500 a month. That's $18,000 a year in rental income. The property appreciates over time, and you're collecting checks every single month. That's an investment because it produces cash flow. It makes you money while you sleep. 10 years from now, that property's worth more. You've collected $180,000 in rent, and you've built real wealth. But what does Bitcoin do for you while you own it? Nothing. Absolutely nothing. You buy Bitcoin today at $100,000, and then what? You sit there staring at your phone, watching the price bounce up and down like a rubber ball, hoping it goes higher. You're not collecting dividend checks. You're not getting rental income. You're not earning interest. You're just waiting and hoping that tomorrow some other person will be willing to pay you $110,000 or $120,000 or whatever number you've convinced yourself it'll hit. Your entire strategy is based on finding someone else willing to pay more than you paid. That's not an investment strategy. That's a gambling strategy. And let me tell you something else. The people pumping Bitcoin right now, they're all using the same playbook. They tell you it's the future. They tell you it's digital gold. They tell you that you're going to miss out if you don't get in right now. It's classic fear of missing out, and it works because people see their neighbor, their coworker, their brother-in-law making money on paper, and they panic. They think, I'm being left behind. I've got to get in on this. So they take money they should be using to pay off debt, money they should be putting in their emergency fund, money they should be investing in actual retirement accounts, and they throw it at Bitcoin hoping to get rich quick. But here's what nobody tells you. The only way you make money on Bitcoin is if someone else loses. Think about that. When you sell your Bitcoin at $150,000 to some poor soul who buys it at the peak, you walk away with a profit. But that person now owns Bitcoin at $150,000, and they need to find someone willing to pay even more. It's a chain that only works as long as new people keep buying in. The moment that stops, the moment people wake up and realize they're holding digital code that produces nothing, the whole thing collapses. And the last people holding Bitcoin are left with nothing. Zero. That's why I say it's going to zero. Because mathematically, logically, it has to. There's nothing underneath it. No earnings, no cash flow, no intrinsic value, just hype. I've studied wealthy people my entire career. I've interviewed thousands of millionaires for my research. And you know what I've never found? I've never found a single millionaire who built lasting wealth by speculating on assets that produce nothing. Not one. The millionaires I study got wealthy by living on less than they make, staying out of debt, and investing consistently in assets that grow over time. Mutual funds, paid for real estate, and businesses they own and operate. They didn't gamble. They didn't chase get-rich-quick schemes. They built wealth slowly, steadily, and safely. That's the formula. That's what works. And Bitcoin is the exact opposite of everything that formula teaches. Everything I teach through the baby steps is designed to build wealth methodically, safely, and with a foundation that can't crumble beneath you. It's a proven system that millions of people have used to get out of debt, build emergency funds, and become millionaires. But Bitcoin obliterates every single one of those steps. It takes everything I teach and throws it out the window. Baby step one is to save $1,000 as a starter emergency fund. That's your buffer against life's little emergencies so you don't have to go back into debt when the car breaks down or the water heater dies. It's not much, but it's something. It's your foundation. And right now, I've got people calling my show who've taken that $1,000 and thrown it into Bitcoin because they heard it was going up. They've gambled away the very foundation of their financial house. Now when an emergency hits, they've got nothing. They're back to using credit cards, back to borrowing money, back to square one. You've taken the first step toward financial peace and traded it for a lottery ticket. Baby step two is paying off all your debt using the debt snowball, smallest to largest, knocking them out one by one until you're completely debt-free. This is where you gain momentum. This is where you take control of your life back from the banks and credit card companies. But instead of getting out of debt, people are going into debt to buy Bitcoin. I'm watching people take out personal loans. I'm watching them max out credit cards at 18, 20, 25% interest to buy a speculative asset that could lose half its value by next Tuesday. You're supposed to be getting out of the hole, not digging it deeper. You're borrowing money that you have to pay back with interest to gamble on something that produces nothing. That's insanity. Baby step 3 is saving 3 to 6 months of expenses in a fully funded emergency fund. This is your protection. This is what keeps you from losing your house when you lose your job. This is what gives you peace of mind knowing that if something goes wrong, you're covered. But Bitcoin's volatility makes this impossible. You can't have an emergency fund in Bitcoin because Bitcoin isn't stable. It's not dependable. One month it's at $100,000. The next month it could be at $60,000. You can't build financial security on something that swings 30, 40, 50% in value. Your emergency fund needs to be in a boring money market account where you know exactly how much you have and it's there when you need it. Bitcoin doesn't give you that security. It gives you anxiety. Then we get to baby steps, 4 through 7, and this is where real wealth gets built. Baby step 4 is investing 15% of your household income into retirement through good growth stock mutual funds. Baby step 5 is saving for your kids' college. Baby step 6 is paying off your home early so you own your house free and clear. Baby step 7 is building wealth and giving generously. These steps take time. They take discipline. They take patience. And Bitcoin derails all of it because Bitcoin promises you can skip the process. It tells you that you don't have to wait 20 years to become a millionaire. It tells you that you can get rich in 6 months if you just buy now and hold on. That's a lie. You cannot build wealth by gambling. You build wealth by getting out of debt and investing consistently in proven vehicles over decades. I've seen this play out thousands of times. The people who follow the baby steps in order, who stay disciplined, who invest their money in mutual funds month after month, year after year, those people become millionaires. The average millionaire in America didn't get there by hitting it big on some speculative investment. They got there by working hard, living on less than they make, staying out of debt, and investing consistently in their company 401k with good mutual fund options. It took them 25, 30, 35 years, but they got there. And when they got there, their wealth was real. It was stable. It wasn't going to disappear overnight. Bitcoin's the exact opposite. It promises overnight riches, and that promise is what makes it so dangerous. People hear these stories about someone who bought Bitcoin at $10,000 and sold it at $100,000 and made a fortune, and they think that's going to be them. But for every person who got lucky and sold at the right time, there are 100 people who bought at the peak and watched their money evaporate. Real wealth building takes 10, 20, 30 years. It's not exciting. It's not flashy. You're not going to impress anybody at a dinner party talking about your boring index funds, but in 30 years, you'll be a millionaire, and the people who gambled on Bitcoin will still be broke, still chasing the next big thing, still hoping to get rich quick. The baby steps work because they're based on time-tested principles of financial management. You spend less than you earn, you eliminate debt, you save for emergencies, you invest for the long term in assets that have proven track records. Bitcoin violates every single one of those principles, and that's why it will leave you broke. If it walks like gambling and talks like gambling, it's gambling. And Bitcoin is gambling in its purest form. Let me define gambling for you so there's no confusion. Gambling is putting money at risk, hoping for a big payout when there's no underlying value being created. You're not buying something that produces income. You're not investing in something that builds wealth over time. You're just throwing your money down and hoping the odds work in your favor. That's what happens at a casino. That's what happens at a racetrack. And that's exactly what happens when you buy Bitcoin. Bitcoin's price is 100% based on emotion, hype, and fear of missing out. That's it. There's no formula. There's no earnings report. There's no price to earnings ratio like you have with stocks. There's no rental income calculation like you have with real estate. The price of Bitcoin is whatever someone is willing to pay for it at that exact moment, and that number changes based purely on how people feel. When people are excited and scared they're going to miss out, the price goes up. When people get nervous and start selling, the price crashes. It's all emotion. It's all psychology. There's nothing solid underneath it. Ask someone why Bitcoin is worth $100,000 right now. Go ahead, ask them. And watch them stumble around trying to come up with an answer. They'll say things like, well, it's scarce, or it's the future of money, or everybody's buying it. But none of those answers actually explain the price. Scarcity doesn't create value by itself. There are only so many original Beanie Babies, too, and nobody's paying $100,000 for those anymore. The real answer, the only honest answer is this. Bitcoin is worth $100,000 because someone is willing to pay $100,000 for it right now. That's it. There's no other reason. And tomorrow, if people stop being willing to pay that much, it'll be worth less. That's not investing. That's speculation based on crowd mentality. This is called the greater fool theory, and it's been around forever. The idea is simple. You buy something not because it has value, but because you think you can find a bigger fool to buy it from you at a higher price later. You buy Bitcoin at $100,000, hoping to sell it to someone else at $150,000. That person buys it hoping to sell it at $200,000, and on it goes. But here's the problem with that theory. Eventually you run out of fools. Eventually the music stops. And when it does, the last people holding Bitcoin are stuck with it. They can't find anyone willing to pay more. The price collapses, and they lose everything. I've watched this story play out dozens of times in my career. I watched it happen with tech stocks in 2000. Everybody was buying anything with .com in the name. Companies with no revenue, no profits, no business plan were trading at insane valuations because people thought they could sell to the next guy at a higher price. Then reality hit. The bubble popped, and people lost fortunes. I watched it happen again with real estate in 2008. People were buying houses they couldn't afford, flipping properties, taking out loans based on imaginary equity because everyone believed real estate only goes up. Then the market crashed, and millions of people lost their homes, their savings, their futures. Bitcoin is no different. It's the same story with a different name. Right now, everyone thinks they're going to get rich. Everyone thinks they're going to be the one who sells at the peak, but most of them won't. Most of them will hold on too long. Most of them will watch the price start to fall and convince themselves it's just a dip. It'll come back. Just hold on a little longer. And by the time they finally accept that it's over, their money is gone. When you buy Bitcoin, you're not an investor. You're a gambler sitting at a casino table hoping to cash out before the table turns. You're betting that you'll get out before the crash. You're betting that you're smarter than everyone else, that you'll see the top coming and sell at exactly the right time. But statistically, almost nobody does that. The people who make money in these bubbles are the early adopters who got in years ago and the insiders who know when to get out. The average person jumping in now because they heard Bitcoin hit 100,000, they're the fuel for the fire. They're the ones buying at the peak, holding through the crash and losing their shirts. I'm telling you this because I care about your financial future. I don't want you to be the person left holding worthless digital code while your retirement account sits empty. I don't want you to be the person who gambled away your kid's college fund on a speculative mania. This isn't investing. This is gambling, and the house always wins. Here's the mathematical certainty that nobody wants to talk about. Bitcoin will eventually be worth exactly what it produces, which is nothing. Zero. And I can prove this to you by showing you how real assets work versus how Bitcoin works. Coca-Cola stock has value because Coca-Cola sells billions of dollars worth of beverages every single year. They have factories, they have distribution networks, they have brand recognition, they generate revenue and profits. When you own Coca-Cola stock, you own a piece of a company that creates value in the world. People buy Coke products, the company makes money. That money flows back to shareholders through dividends and stock appreciation. That's why Coca-Cola stock has been making people wealthy for decades. It's backed by real business activity, real products, and real cash flow. Real estate has value because people need shelter. They need a place to live. When you own rental property, people pay you rent every month because they need housing. That's intrinsic value. Even if the housing market crashes, people still need somewhere to sleep at night. Your rental property still has utility. It still serves a function. It still generates income. That's why real estate has been building wealth for centuries. It's a tangible asset that meets a fundamental human need. Good growth stock mutual funds have value because they own hundreds of companies producing goods and services that people actually use. When you invest in a mutual fund, you're not betting on one company. You're spreading your money across dozens or hundreds of businesses, companies making cars, building computers, selling groceries, providing healthcare, and manufacturing equipment. These companies employ millions of people. They create products. They generate profits. And over time, as the economy grows, your investment grows with it. That's why mutual funds with long track records consistently build wealth. They're tied to real economic activity. But Bitcoin produces nothing. It makes no sense. It does nothing. It is nothing. There's no factory producing Bitcoin products. There's no service being provided. There's no revenue stream. There's no profit and loss statement. It's just code sitting on a blockchain doing absolutely nothing productive. You can't use Bitcoin to make something. You can't generate income from it. It doesn't feed anyone. It doesn't house anyone. It doesn't solve any real problem in the real economy. The only reason Bitcoin has any price at all is because of hype and the fear of missing out. That's the only thing propping it up. Every single bubble in history has eventually popped, and they all popped for the same reason. The underlying asset had no real value. Tulips in the 16th century became so hyped that people were paying the equivalent of a year's salary for a single tulip bulb. Then reality set in. People realized they were holding flowers, and the market collapsed overnight. Tulips went back to being worth what they actually were, just flowers. Beanie Babies in the 90s had people convinced they were buying their retirement. People were spending hundreds, thousands of dollars on stuffed animals because they thought they'd be worth a fortune someday. Then the fad ended, and now you can't give those things away at a garage sale. Tech stocks in 2000 had people buying companies that had never made a dime of profit because everyone believed the internet changed all the rules. It didn't. Companies still need to make money. When the bubble burst, trillions of dollars vanished. Bitcoin's following the exact same pattern. People have convinced themselves that this time it's different. They've convinced themselves that digital scarcity creates value. They've convinced themselves that blockchain technology means Bitcoin will hold its price forever, but it won't. When this crashes, and it will crash, it will go to zero because there is nothing holding it up. No earnings, no cash flow, no utility. Just hype. And when the hype dies, when people move on to the next shiny object, when fear replaces greed, Bitcoin will collapse. And here's what kills me. The people buying Bitcoin right now are risking money they need. They're risking their emergency funds. They're risking their retirement savings. They're risking money that should be going toward getting out of debt or investing in proven wealth-building tools. And for what? For the chance to gamble on digital code that produces nothing and will eventually be worth nothing. Don't be the person left holding worthless digital code while your retirement account is empty. Don't be the person who looks back in 10 years and realizes you gambled away your financial future on a fad. Don't be the person who chooses speculation over proven wealth-building principles. Because when Bitcoin crashes to zero, and it will, you're going to wish you had taken that money and invested it in something real, something that produces income, something that builds wealth over time, something that actually matters. Here's what actually builds wealth, and it's not sexy, but it works. It's worked for millions of people. It'll work for you if you follow it. Stop chasing the next big thing and start doing what wealthy people actually do. Follow the baby steps in order. This is the proven path. Start with your $1,000 emergency fund. Get that in place. Then attack your debt with a debt snowball until you're completely debt-free except for your house. Then build your fully funded emergency fund of 3 to 6 months of expenses. Then start investing 15% of your household income into retirement. Then save for your kids' college in an education savings account or a 529 plan. Then pay off your home early. Then build wealth and give generously. That's the path. It's simple, it's boring, and it works every single time. When you get to baby step 4 and you're ready to invest that 15%, here's where you put it. Good growth stock mutual funds with 10-plus year track records. Not Bitcoin, not cryptocurrency. Not whatever your coworker's hyping up this week. Mutual funds. I'm talking about funds that have been around long enough to prove themselves through market ups and downs. You spread your investments across 4 types of funds: growth, growth and income, aggressive growth, and international. That gives you diversification. That gives you stability. That gives you exposure to hundreds of companies across different sectors and different parts of the world. And over 20, 30, 40 years, those funds will make you wealthy. The math on this isn't complicated. If you invest $1,500 a month into good mutual funds, averaging 10 to 12% returns in 30 years, you'll have over $3 million. That's not a get-rich-quick scheme. That's compound interest doing what it's always done. That's time in the market building real wealth. You're not gambling. You're not speculating. You're systematically putting money into assets that have proven themselves over decades. That's how you retire with dignity. Real estate is another wealth-building tool, but you do it right. You buy rental property with cash, not with debt, not by flipping, not by speculating that prices will go up. You buy a property outright, you rent it out, and you collect income every month. That rental income pays you whether the market goes up or down. That's stability. That's passive income. That's an asset that works for you. And over time, that property appreciates and you build more wealth. But you never borrow money to do it. You save up, you pay cash, and you do it the smart way. Pay off your house early. I don't care if people tell you it's better to keep a mortgage and invest the difference. I don't care about the math arguments. Complete debt freedom is the foundation of wealth and peace. When you own your home free and clear, nobody can take it from you. You have zero payments except utilities and property taxes. That's freedom. That's security. And once you have no debt whatsoever, your income becomes a wealth-building tool like you've never experienced. Every dollar you make goes toward building wealth instead of paying banks. The millionaires I've studied for years didn't get rich gambling on Bitcoin. They didn't get rich on some hot stock tip. They didn't get rich overnight. They got rich slowly, consistently, over decades by doing the boring stuff. They lived on less than they made. They stayed out of debt. They invested steadily in their workplace retirement plans. They bought and paid off their homes. They built businesses. They worked hard. And 30, 35, 40 years later, they were millionaires. The average millionaire in this country drives a paid-for used car, lives in a modest house, and never did anything fancy with their money. They just did the basics consistently. In 30 years, my mutual funds will have made me wealthy. They'll have grown. They'll have compounded. They'll have built real, lasting wealth that I can pass on to my kids and grandkids. Bitcoin will be a Wikipedia entry about a financial mania that came and went. It'll be studied in business schools as an example of crowd psychology and speculation gone wrong. It'll be remembered the same way we remember tulip mania and the dot-com bubble. And the people who gambled their futures on it will be broke, wondering what happened. Don't gamble your family's future on digital fool's gold. Build wealth the proven way, and you'll actually have something when you retire. You'll have security. You'll have peace. You'll have a legacy. Bitcoin can't give you any of that. It can only take from you. Bitcoin at $100,000 isn't a buying opportunity. It's a warning sign that the bubble is about to pop. It's a flashing red light telling you to stay away. Don't be the person who loses everything chasing a get-rich-quick fantasy. Don't be the person who gambles away their shot at financial peace because they got caught up in the hype. Follow the baby steps. Invest in proven mutual funds. Get out of debt. Pay off your house. Build real wealth slowly and steadily. That's how millionaires are made, and that's how you'll become one. Bitcoin, it's going to zero. And when it does, I don't want you caught in the wreckage. Don't say I didn't warn you.